Hello friends, James Stevenson back with another video with a bunch of charts in it that I made comparing Tesla against Ford and GM over the past 14 years. Why 14 years? Well, Tesla became a publicly traded company 14 years ago in 2010 at their initial public offering. So we know what Tesla did over that time period. I thought it would be fun, helpful, useful, etc., to compare against other companies. The two major U.S. automakers is who I'm comparing against, right, Loki? That was Loki's recommendation. You can keep an eye on Loki in the Loki Cam if you want, while I run through this series of comparisons. So where are we going to start? Let's start with revenue. We know Tesla's revenue has been growing over the past 14 years from almost nothing back here in 2010, $117 million, way less than $1 billion worth of revenue for Tesla back here. What were Ford and GM doing? You know, between 120 and 160 billion dollars, somewhere in that range. So yeah, Tesla passed $1 billion back here in 2013, huge revenue growth from 2012 to 2013. On this scale, it doesn't look huge, but it was. Giant multiple, 400 million to 2 billion. That's 5 times more revenue between this year and this year. It looks so small at this scale, though. Then things really ramped up after Tesla got Model Y production cooking from 31 billion in 2020 to 54 billion almost in 2021, 81 billion in 2022. The Shanghai Gigafactory helped a lot to increase Tesla's sales worldwide. And last year, full year 2023, $97 billion worth of revenue, almost. How are Ford and GM doing? Well, they had a bad year or two in 2020 and 2021, blaming these on COVID and a chip shortage, I guess. But then they kind of bounced back to the same levels they were at in 2017, 2018, 2019, kind of at this level. And they kind of got back there. Last year was a pretty good year for both in terms of revenue. And not all of their metrics are getting worse, as you'll see when we go through these charts. Let's look at the next one. It's going to be free cash flow. So yearly free cash flow for Ford is negative sometimes, like in 2016 and in 2017 they had negative cash flows. Yes, Tesla had negative cash flows trying to ramp back in this time period. So yeah, that's what these free cash flow numbers look like. 2022 was the best year for 2 out of 3 of these companies, Tesla and Ford, with GM having its best year last year, 2023. They had almost $12 billion, 11 billion 666 in 2023 for General Motors. What else do we have here? How about cash balance? How much money do you have in the bank? Now, this figure by itself is not a figure of merit. And what I mean by that is you can get a really big cash balance by issuing a bunch of new shares of stock or by borrowing a lot of money, right? You can get a big cash balance that way. What you want is to get that cash balance as a result of your positive free cash flow adding to your cash pile. You want your company to be producing cash. And all these companies are lately. Like these are all decent free cash flow numbers over the past 3 years from all 3 companies. But the cash pile has been falling at Ford. I guess they decided 50 billion was too much cash to have on hand. Tesla had very low cash numbers indeed years ago when they didn't need to have all that much operating cash on hand because the company was a lot smaller back then, right? So they've been growing cash quite a lot. Tesla now has more cash on hand than General Motors does, despite selling way fewer vehicles, right? Tesla sells 4.5 models, 5 models. I guess. GM sells dozens of models globally, as does Ford. They both do. All right, so that's the cash situation. Now we'll look at the profits or earnings per share. How are those looking? Well, Tesla was losing money for a long time until 2020 when earnings per share turned into a positive number. I have split adjusted all of these. In the last version of this that I did, I had left the numbers as pre-split, which showed Tesla, flying off the page to the high side. It's kind of a chart crime to compare earnings per share for three different companies at all because the three companies all have different share counts. So it's not comparable to throw earnings per share on a chart and say, hey, look, GM is doing better than Tesla is. Well, no, the share count is different, so you can't directly compare them and say one is better than the other. But what you can do is compare each company against its own trend and say, well, Tesla GAAP earnings, which is what these are, were up in 2023 versus 2022. And that was a record, and that was a record, and that was a record, right? Every year, Tesla has set a new and higher earnings record going back, to 2020. So four straight years running, Tesla is at peak earnings per share. And General Motors is doing really well over the past 3 years. Those earnings look fine. Ford less so. They've got some weirdness going on. They've been investing in Rivian, so they have Rivian gains and losses that impact their GAAP earnings per share. So some of that weirdness hit here and here and here, I think. So that's the earnings per share comparison. Let's look at the long-term debt. So on the previous charts, higher was better. Now we're on our first chart where lower is better. You want less debt. All things being equal, you want less debt. So Ford and GM have big financing arms, which makes them different from Tesla. Yes, you can finance through Tesla, but Tesla is going to immediately sell off that debt and convert it to cash. These other companies are going to hold that debt in their financing arm. So GM had GMAC for decades before they went bankrupt back in 2008. And when they emerged from bankruptcy, I think it was Ally Bank for a while, and then they might have spun that one off independently, but they still have a GM financing division. Ford has Ford Credit division, right? So they're holding a lot of long-term debt from people who bought their cars. So not only are they financing their own production of the cars, then they're financing the dealerships who buy their cars, and then they're financing the end customers who purchase the cars and own them, right? So they're kind of like banks in addition to being manufacturers. And making money off interest from those loans to dealerships and to retail customers. But look at Tesla's debt. It had been as high as, what's that, $11.6 billion, and Tesla has been paying down that long-term debt early to the point that they've got, way less than $5 billion, less than $3 billion worth of debt on the books, whereas GM and Ford have been increasing theirs back up some. GM steadily, since emerging from bankruptcy, just about every year, they've got more debt than they had the year before, with a couple of exceptions. Ford likes to hang out in this $100 billion range for long-term debt. All right, so let's do some ratios on these because I can hear the critics screaming at their TV right now. James, there's assets that offset those debts. Okay, well, let's do comparisons. Let's do some ratios. That's how you measure the strength of a balance sheet, as you look at ratios, right? Let's compare the long-term debt to the total assets, which includes the receivable assets that are offsetting these debts, right? When you loan somebody money, you have a receivable. You expect to be paid back for the money that you fronted people. They're supposed to be making payments on those. So that's an asset to your company that you expect to receive payments back. But if you look at these ratios, how much long-term debt do each of these companies have relative to their total assets? Well, in Tesla's case, this number had been, in the same neighborhood Ford and GM are in now, which is, at latest check, 36 cents of total debt per dollar of assets for Ford, 30 cents of total debt per dollar of assets for GM. Tesla's down to only 2 cents of long-term debt per total asset. So a very tiny amount of debt indeed for Tesla relative to how many dollars worth of assets the company has. And let's do another comparison where lower is better. This is long-term debt to revenue. So for every dollar of revenue that you're taking in from customers, how much long-term debt have you racked up as a company? Well, for Ford, the answer to that question is 57 cents of long-term debt per dollar of revenue. For GM, it's 48 cents of long-term debt per dollar of annual revenue. And for Tesla, it is 3 cents. Yeah, 3 cents of long-term debt per dollar of revenue. Very, very manageable for Tesla. And I'll finish off with this one. This one flips it the other way. This is cash to long-term debt ratio. So in the previous couple of charts, it was how much debt do you have relative to whatever. So you want that to be a small number. On this chart, it's how much cash do you have per dollar of long-term debt. You want that to be a big number. And in Tesla's case, it has grown to a very large number indeed. $10 worth of cash per dollar of long-term debt. That's pretty good, especially if you compare it to GM, which after emerging from bankruptcy was doing very solid for a few years before their debt kept ratcheting up higher and higher all the time, right? So they are now down to well below $1. What do these say? Ford is 40 cents and GM is less than that. If I can hover over it. GM is 32 cents of cash per dollar of long-term debt. So what's this metric tell you? It says what percentage of your long-term debt you would be able to pay off if you put all your cash into it. So GM and Ford could pay off about a third of their long-term debt with their cash on hand if they wanted to. Tesla has the ability to pay off all of their long-term debt more than 10 times with the cash they have on hand. So those are the metrics, and I got them all just from punching in their numbers from websites, etc. Each of these companies report their earnings on their websites, so you can go check out those links if you want to see their full earnings. The other resource I want to show you before I go is this one. That's going to be hard for you to read probably unless you're watching me on a 4K display or something. I'm only uploading in 1080p, so a 4K display won't help you that much. But this is courtesy of Alexandra Mertz at Tesla Boomer Mama on X. If you wanted to compare Tesla against more companies than just Ford and GM, you can see Ford and GM down here, right in the middle of the Automaker section. Alexandra has helpfully color-coded all of the values you see in these columns to dark green being the best you can get, and then these red colors being the worst. They're Earl Red, the worst. And some of you will get the reference that I just made. And here's the Tesla line. So Tesla is the second best, fourth best, sixth best, third best, eighth best. Top 10 for balance sheet strength according to these ratios. I showed you cash to debt just now. Well, I showed you cash to long-term debt, which may not be exactly the same number. Alexandra also has here debt to equity, debt to EBITDA, debt to revenue, I think I showed you one similar to that just now. And then Altman Z-score, which is another good one. Some people say you should not use it for automakers that finance their own debt because they're kind of like a bank. They're like half a bank, and you shouldn't use Altman Z-score on banks. So that's why you see straight red down the other automakers for Altman Z-score. They are all in the distress zone below 1.8, except for Stellantis and Toyota, who are in kind of whatever that danger zone is for Altman Z-score. You don't want a number below 1.8, and most of these companies are there. Tesla's Altman Z-score 10.35, the eighth best, in the same neighborhood as Google, Facebook. Nvidia looks spectacular on Altman Z-score. Novo Nordisk, MasterCard. So you got a lot of comparisons to like the 30 largest by market cap publicly traded companies in the US here on this chart. So kudos to Alexandra for keeping this table updated quarterly. That's pretty great information to go look at. If anybody says Tesla's balance sheet isn't strong enough, you can set them straight by showing them that indeed Tesla's balance sheet is one of the strongest in the world, not just for automakers, but for any kind of company. Hardly anybody is doing better. Like Alphabet is doing about as well, or maybe a little better than Tesla is on average across these dimensions, and almost nobody else is. And that's my video for today. So with that, I will check back in with my co-host Loki, who is still sleeping on the job in his bed. Before I thank you for watching this video, remind you to like the video if you liked the video so the algorithm can recommend it to other people. And to thank everyone who supports me, if you're doing that through Patreon or on X, or by joining my YouTube channel, as my two big baller executive producers, Kenty Kitchler and Rebellionaire.com did. And I'll see you in the next one.